Hey guys, welcome back to Firestarter Investing. My goal is to help you understand your investments and make informed decisions. Today we're going to be diving into NVIDIA Corporation, ticker symbol NVDA. We'll go over a brief summary of NVIDIA, some recent news, what they offer, risks, financials, some bull and bear cases, and my thoughts on valuation. NVIDIA Corporation was founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Priam. NVIDIA is a leader in GPU and AI technologies, holding over 95% share of the AI chip market. Jensen Huang, who serves as CEO, is known for his visionary leadership in AI and GPU computing. Chris Malachowski remains involved with NVIDIA as an NVIDIA Fellow, focusing on AI and graphics innovation. Curtis Priam left the company in 2003 to focus on philanthropic efforts. The company's name, NVIDIA, is a combination of NVIDIA, the Latin word for envy, and NV, an abbreviation for Next Vision, which they used early on to label their files. The company is headquartered in Santa Clara, California. NVIDIA has revolutionized fields like gaming, data centers, autonomous vehicles, and AI research. The company employs over 31,000 people worldwide. It operates under a fabless manufacturing model, outsourcing production to partners like TSMC. The stock has increased over 2,000% over the last 5 years, with more than a doubling in the last year alone, and the company is now worth over $3 trillion. At CES last week, NVIDIA launched Project Digits, a personal AI computer based on the Grace Blackwell platform, to allow AI researchers, data scientists, and students to use large models locally. They also announced Cosmos, which is a platform to accelerate the development of AI systems that interact with the physical world, coining the term World Foundation Model. NVIDIA introduced its own AI foundation models and enhanced the Omniverse platform, integrating physical AI applications such as robotics and vision AI. The DRIVE Hyperion platform achieved critical advancements in automotive safety and cybersecurity, including the integration of NVIDIA DRIVE Thor, a cutting-edge AI SoC enabling real-time data processing for autonomous driving. NVIDIA also announced a partnership with Toyota to develop next-generation autonomous vehicles. As mentioned earlier, Jensen Huang continues to serve as the CEO and president of NVIDIA. Prior to founding NVIDIA, he worked at AMD and Sun Microsystems, where he met his co-founders. He holds a bachelor's from Oregon State University and a master's from Stanford University. His total compensation in fiscal year 2024 was $34.17 million, primarily from stock awards. He also happens to be cousins with the CEO of AMD, Lisa Su. Colette Kress is NVIDIA's CFO. She joined NVIDIA in 2013. Before joining, she spent 25 years in senior finance positions at other tech companies, including Microsoft, Cisco, and Texas Instruments. Kress holds a bachelor's in finance from the University of Arizona and an MBA from Southern Methodist University. Her total compensation in fiscal year 2024 was $13.3 million, primarily from stock awards. Jay Puri is the Executive Vice President of Worldwide Field Operations. He joined NVIDIA in 2005 after 22 years at Sun Microsystems, where he held many roles including Senior Vice President of Sun's Asia Pacific Group, Vice President of Worldwide Sales for Software and Technology, President of Nihon Sun KK, and Vice President of Worldwide Product Marketing. Puri holds a Bachelor of Science in Electrical Engineering from the University of Minnesota, a Master of Science in Electrical Engineering from the California Institute of Technology, and an MBA from the Harvard Business School. His total compensation in fiscal year 2024 was $13.6 million, mostly from stock awards. Deborah Sjoquist is the Executive Vice President of Operations. Before joining NVIDIA in 2007, she held executive roles at JDS Uniphase and Coherent, and spent 11 years at Quantum and 10 years at HP in various engineering and manufacturing roles. She has a bachelor's in electrical engineering from Kansas State University and a bachelor's in biology from Santa Clara University. Her total compensation in fiscal year 2024 was $11 million, mostly from stock awards. Tim Teeter is the Executive Vice President, General Counsel, and Secretary of NVIDIA. Before joining in 2017, he was a partner at the law firm Cooley LLP, where he had worked for over 20 years, specializing in patent and technology litigation. He also worked as an engineer at Lockheed Martin before law school. Teeter holds a JD from Stanford Law School and a bachelor's in mechanical engineering from the University of California, Davis. His total compensation in fiscal year 2024 was $11 million, with the majority coming from stock awards. NVIDIA's products have become essential components in various applications, including gaming, professional visualization, data centers, and automotive and robotics, and of course a significant portion of their product contributes to AI and machine learning. NVIDIA's GPUs have a wide range of uses, such as in desktops and laptops where they're great for gaming, data centers where they've been used to train AI models, and at one point were even popular for Bitcoin and other cryptocurrency mining. NVIDIA also develops dedicated hardware for data centers, such as advanced chips to handle heavy workloads and networking equipment to ensure high efficiency, low latency data transfers needed for AI use cases. And they're even developing hardware for edge computing, such as the DRIVE platform for autonomous vehicles, embedded systems for robotics, the aforementioned Project Digits computer, which is based on the data center chip architecture, and Jetson Orin. NVIDIA also offers several software products and features to make developing using their products easier and connect everything together. The Omniverse is a platform that enables 3D design collaboration and simulation, with applications in fields like gaming, design, and industrial digitalization. CUDA software, which used to stand for Compute Unified Device Architecture, enables developers to harness GPU power for AI and scientific simulations. NVIDIA first released CUDA in 2006. Since then, the CUDA ecosystem has become extensive and robust, with many developers and applications relying on it. Since it's developed and supported by NVIDIA, CUDA is deeply integrated with NVIDIA's hardware and driver stack, allowing for optimized performance. For developers that have built their systems using NVIDIA hardware and CUDA, switching to a different platform would be a lot of work, which effectively locks them in to getting NVIDIA hardware. NVIDIA faces competition from AMD, which continues to develop competitive GPUs and AI accelerators. Intel is ramping up its presence in the AI and data center markets with solutions like its Habana Gaudi AI chips. Startups like Grok are also entering the market with innovative approaches. Even the other big tech companies are starting to develop their own chips for in-house AI workloads. Despite the competition, NVIDIA's comprehensive integration of hardware, software, and partnerships gives it a notable edge over rivals that rely on fragmented solutions. NVIDIA has built several strong moats that solidify its position as a market leader. First, its technological leadership, where it exemplifies continuous innovation in GPUs, AI solutions, and software integration ensures NVIDIA remains ahead of its competitors. The extensive and mature CUDA platform also creates a significant barrier to entry for competitors and locks in developers to NVIDIA's hardware. NVIDIA is also synonymous with high-performance GPUs and AI technologies, which boosts its credibility across industries. Partnerships with automakers, cloud service providers, and developers amplify the value of NVIDIA's ecosystem. The collaborative nature of the Omniverse also helps solidify the network. And finally, products like Omniverse, DRIVE, and Project Digits seamlessly tie hardware and software together, making NVIDIA indispensable in many workflows. Despite its dominance, NVIDIA faces several challenges. The company relies heavily on TSMC for manufacturing, which exposes it to potential supply chain disruptions, geopolitical risks, and fluctuations in manufacturing costs. Strained relations between China, Taiwan, and the US amplify these risks and should be monitored. Just recently, the Biden administration put new restrictions on the exports of AI chips, which will negatively impact NVIDIA directly. There's increasing competition from AMD, Intel, and emerging players, particularly in AI chips and data center markets, which could challenge NVIDIA's market dominance. Given the rapid increase in NVIDIA's stock price, there's a non-trivial chance of a stock correction, especially if revenue growth slows or the broader market experiences volatility. Quantum computing may, in the long run, potentially disrupt NVIDIA's dominance in AI chip technology, as advancements in quantum processors may provide alternative solutions for computing tasks currently reliant on GPUs. However, I think we're still at least 5 years away from quantum computing being ready for practical use, and 10 years away from it being significant enough to challenge traditional computing, so I consider it a low risk for now. 87% of NVIDIA's revenue is now coming from data center sales. However, companies are still trying to figure out how to make the new AI capabilities profitable. If they collectively decide to stop investing as much as they have into AI, NVIDIA's revenue would collapse. NVIDIA's financial numbers have increased significantly over the last few years. Before moving forward, I should note that NVIDIA's fiscal year ends on the last Sunday of January, and the fiscal year is named after the calendar year it ends in. So when you see fiscal year 2024, that means the fiscal year that ended in January 2024. And fiscal year 2025 will end in a few short weeks. Fiscal year 2024 revenue was $60.9 billion, a 125% year-over-year growth. In year-to-date 2025, NVIDIA has already achieved 50% more revenue than in 2024. Gross margin is strong at almost 75%. Net income hit $29.8 billion in 2024 and is at $50.8 billion year-to-date 2025. Free cash flow and EBITDA show similar increases. All of these financials highlight the impact of the AI craze and how much of NVIDIA's revenue and valuation is tied to its role in the current AI revolution. NVIDIA's debt-to-equity ratio has been less than 1 and on a downward trend, reflecting a strong balance sheet. The bull thesis is pretty simple. NVIDIA's dominance in AI chips ensures long-term growth by meeting the ever-increasing demand for AI and machine learning applications across various industries, including automotive, healthcare, and gaming. The total addressable market for data center semiconductors is expected to double by 2029, and NVIDIA will be a significant portion of that. The company boasts a strong innovation pipeline with groundbreaking technologies like the Grace Hopper architecture and the Omniverse platform, which enhance its competitive advantage. Strategic partnerships with leading automakers, cloud service providers, and AI developers strengthen its market position and foster ecosystem growth. And finally, the widespread adoption of AI across industries creates sustained demand for NVIDIA's GPUs, data center solutions, and software, ensuring its relevance and growth potential. To be fair and thorough, I want to look at a few bear theses as well. NVIDIA's reliance on the AI market makes it vulnerable to cyclical downturns or stagnation in AI adoption, which could significantly impact its growth trajectory. Geopolitical risks, particularly US-China tensions and reliance on TSMC, pose threats to NVIDIA's supply chain resilience and revenue stability. The company's high valuation increases the risk of stock price corrections, especially if earnings fail to meet lofty expectations or if macroeconomic conditions dampen investor sentiment. And finally, emerging competitors in the AI chip space, coupled with advancements in alternative computing technologies like quantum processors, could erode NVIDIA's market share over time. I want to give a quick summary of my valuation model. Given that NVIDIA still has a lot of pricing power, I'm projecting revenue to grow to over $478,000 over the next 5 years, with the majority of that growth coming from its data center and automotive revenue lines. This represents a 43% compound annual growth rate, or CAGR, over the next 5 years, and a 25% CAGR over the next 10 years. NVIDIA said in their earnings call in February of 2024 that they expect the total AI data center install base to double by 2029. And if that correlates to a doubling in the data center total addressable market, that puts a cap on the 2029 revenue at around $500 billion. Of course, NVIDIA will not have 100% of that market, which effectively implies a significant slowdown in their data center revenue growth over the next 4 to 5 years. Free cash flow and net income grow at similar rates to the revenue. Combining different valuation methods, I see NVIDIA's stock price reaching $211 in 5 years and $347 in 10 years. NVIDIA wouldn't stay the hottest stock forever, and multiples will generally trend toward the average, so I use the average multiple value for my valuations. This represents a 9% CAGR over 5 years and a 10% CAGR over 10 years from today's price of $135. Given that the S&P 500 averages a 10% annual return, this tells me that I shouldn't expect NVIDIA to significantly outperform the market over the next 5 to 10 years. As for my final thoughts, the company has strong management with decades of experience. The company's balance sheet is strong with little risk of default. NVIDIA is a dominant player in its markets and has strong competitive advantage to keep it a dominant player. Apart from the geopolitical risks, I don't think the risks to NVIDIA's business are high. I don't expect the AI market to slump significantly in aggregate over the next 5 to 10 years. And even with new increasing competition, NVIDIA looks to have a strong future for the next 5 to 10 years. However, a lot of growth has already been priced into NVIDIA's stock, meaning that there's a higher risk of downside than potential upside right now. Based on my forecasts, I can get an equivalent return with less risk by putting money into the S&P 500. Given all of this, I bought a small starter position in NVIDIA, but intend to wait for a pullback before getting in further. What do you guys think about NVIDIA? Let me know if I missed something in my analysis. Also, let me know if there's another company you'd like me to dive into. Until next time.